Assalamualaikum warahmatullah and welcome everyone. In this video presentation, we will discuss some questions on intangible assets, specifically on research and development costs, its impairment and reversal of the impairment. These questions have actually been distributed to you during our last lecture. So to make this presentation effective, you must have the question with you. If you do not have the question, please download it from Putra Blast, print it if you can, or have it available in your notebook or laptop or your smartphone so that you can refer to it when we do the discussion. You may pause this video to get a copy of the questions and come back when you're ready, okay? Before we start discussing the questions, just a couple of things that we must remember. The first one is the 6 recognition criteria. From our previous discussion, we already know that specifically for research and development costs as intangible asset, the project must first fulfill all of the 6 recognition criteria before we can capitalize the costs incurred in the project as intangible asset. Another thing to remember is for research and development activities, we basically have 2 separate phases. The first is research phase and the second is the development phase. We also know that all costs incurred during research phase could never be capitalized since the activities will never be able to fulfill the 6 recognition criteria. Therefore, all costs under research phase must be expensed. For the development phase, especially at the earlier periods of the phase, we do know that the project will not fulfill the 6 recognition criteria yet. Therefore, all costs will still need to be expensed. As we go towards the end of the development phase, there will be a point where the project eventually fulfills the 6 recognition criteria. Thus, that is when we can start to defer the costs incurred and capitalize it at the end as an intangible asset. We also know that at the end of a research and development project, we will basically end up with a new equipment or a new processing to be used or a new product that can be commercialized. So the moment that we start using the new equipment or new processing or start commercializing the new product, that is when we need to start amortizing intangible asset. And perhaps after several years, we might decide to discontinue the use of the equipment or the processing or stop commercializing the product. Thus, this is when we also need to derecognize intangible asset. Therefore, we need to transfer the balance from research and development costs as intangible asset account to disposal or non-current asset held for sales account. For the first question, we are given a list of costs incurred by the biotech Berhad who undertaken a research and development project. We are also given 2 other costs not included in the list, salaries of scientists and technicians of 1.2 million ringgit and depreciations of equipment used in the projects of 900,000. The management, however, has estimated that 1/3 of these costs relate directly to the development of the project. Now, for a cost to be relevant, the cost must be coming from the research and development activities, or if it's not a research and development activity, it must be directly related to the research and development activities. And as for this question, 1/3 of salaries of scientists and technicians, as well as a depreciation of equipment used, has been identified as part of the cost for the development activities. Having said that, we can now list down the relevant costs. So we have cost of material use 5 million, services of consultation used in the project 2 million, fee to register a trade design 50,000, amortizations of patent used in the project 100,000, salaries of scientists and technicians 1/3 of that 400,000, depreciations of equipment used in research and development activities 1/3 of that 300,000. All of these amounted to 7.85 million ringgit. Now, as for the fee to register a trade design, perhaps it is a design specifically developed and used in the project. And the amortizations of patent could be related to an equipment or a processing that has been developed in another research and development project and being used in this project. Therefore, the amortizations of the intangible asset, in this case the patent, must also be included in the relevant cost of research and development costs of this project. As for the rest of the costs, there are non-relevant costs, thus all of them will be expensed. Moving on to the question B. In this question, we are given two separate projects, Project A and Project B. For this question, we need to decide on how much costs incurred under each project that can be capitalized and how much should be expensed. So before we go on with the question, please note that for both projects, ATB Berhad has capitalized costs incurred in the year before the current year. So this can only mean that ATB Berhad believes that at the end of prior year, both projects have fulfilled the 6 recognition criteria. Let us now analyze each project separately. For Project A, we know that it has a deferred development cost of 10 million from prior year. And in the current year, there is an additional 3 million development cost incurred. Also, at the end of the current year of 2023, ATB Berhad believes that the market for the products from the project is unlikely to exist. So this can only mean that the project now could not fulfill at least one of the 6 recognition criteria, that is criteria D, the ability to generate future income. Well, if you do not have a market for your products, you cannot make sales, thus no income can be generated. So now that the project cannot be capitalized, all of the 13 million worth of accumulated research and development costs must be expensed. I would like to also highlight that since the market for products from Project A has been identified to be non-existent, perhaps ATB Berhad should also do the same assessment for products from Project B, just in case. As for Project B, it has a deferred development cost of 15 million, and in the current year there is an additional 4 million of development cost. And at the end of the current year 2023, ATB Berhad believes that the project continued to fulfill the 6 recognition criteria, thus all of the costs could be capitalized. For that, we need to apply the principle under MFRS 136, that is, we need to calculate the recoverable amount for the project and determine the amount to be capitalized. That also means that the amount capitalized should not exceed the recoverable amount, and amounts exceeding recoverable amount must be expensed or transferred to profit and loss as an expense. Having said that, to determine the recoverable amounts of the project or the products from the project, we need to determine its fair value minus cost to sell and its value in use. However, since the product is not yet in the market, it is not possible to determine its fair value. Thus, we are left with value in use. So for this project, we are given 38 million worth of revenue from sales of the product, that is the cash inflow. 6 million worth of further development cost to complete the project, that is a cash outflow. Another 12 million cash outflow related to production cost, and another 4 million worth of cash outflow from directly attributable selling and administration cost. The net amount being 16 million. Now this 16 million is the amount of value in use. Now that we have determined the recoverable amount to be 16 million, we need to compare that with the accumulated research and development cost, which is 19 million. As mentioned earlier, the recoverable amount will be the maximum amount that can be capitalized as an intangible asset. So for this case, we can capitalize 16 million, while the excess of 3 million must be expensed. So the journal entries for both projects will be as follows. For Project A, during the year, it has additional 3 million development costs, thus we debit research and development cost account 3 million and credit bank or any other relevant account 3 million. At the end of the current year, unfortunately we could not capitalize the accumulated costs, thus we need to transfer the cost from R&D cost account to R&D expense account, which will later on be transferred to P&L or income statement as an expense. For project B, during the year, there is also an additional 4 million worth of development costs. So we debit research and development cost account 4 million and credit bank or any other relevant accounts 4 million. At the end of the year, we have determined that only 16 million out of the total 19 million could be capitalized. Thus, the excess of 3 million need to be transferred from research and development cost account to research and development expense account. Let us now move on to question C. Like question B, here we also need to determine the amount that could be capitalized as an intangible asset by calculating the recoverable amount of the research and development project or the product from the project. From the question, we know that the firm has incurred costs under this project for 3 consecutive years, 2.5 million in 2021, 7.5 million in 2022, and 2 million in 2023. However, the firm has only started to defer the cost in 2022, so this can only mean that for the year 2021, the firm believed that the project has not fulfilled the 6 recognition criteria. Thus, all the costs incurred from the project in 2021 has been expensed. So by the end of the year 2023, the firm has an accumulated research and development cost of 9.5 million. In the same year, the firm has also able to estimate the recoverable amount by the information given, and we need to use the principles in MFRS 136 in order to identify the cost allowed to be capitalized. Like the case in previous question, we can only determine the value in use for this project. So we have 18 million worth of revenue as the cash inflow, 3 million worth of additional development cost to complete the project, that is a cash outflow, 6 million worth of production cost, another cash outflow, and 1 million worth of directly attributable selling and administrative costs, another cash outflow. That gives us a recoverable amount of 8 million. Now please note that for other administration costs, it is not included in the calculations of recoverable amount since it is not directly related to the product from this project. Now we can compare the recoverable amount with the total research and development cost accumulated, which is 9.5 million. As mentioned before, amount capitalized cannot exceed the recoverable amount. Therefore, we can only capitalize 8 million, while the excess of 1.5 million must be expensed. As for the journal entries, in 2021, the firm has incurred 2.5 million development costs, but at that point, the project has not fulfilled the 6 recognition criteria, thus the entire amounts of 2.5 million must be expensed. In 2022, this is when the project has eventually fulfilled the 6 recognition criteria, therefore we can now defer the cost. So we debit research and development cost account 7.5 million and credit bank or any other relevant accounts 7.5 million as well. In 2023, the firm has incurred additional development costs of 2 million, so we debit again research and development cost account 2 million and credit bank or any other relevant account 2 million. In the same year, the firm could also estimate the recoverable amounts of the project, which we have calculated to be 8 million. Thus, the excess of 1.5 million must be transferred from research and development cost account to research and development expense account. So from there, we now have a balance of 8 million in the research and development cost account as an intangible asset. We have now reached our last question, question D. For this question, we have already given the impairment loss, which is already recognized by the firm, and from there, we need to do a reversal. But before we move forward, there are a few things that I would like to highlight here. First, The expected useful life of an equipment as a result of the research and development project undertaken by Biberhard is determined to be 6 years. So the 6 years can also be utilized as the useful life of the intangible asset attached to the projects. Therefore, 6 years will be used to calculate the amortizations of the intangible asset. Second, in the first year of use of the equipment, the sales for the products produced by the equipment has unexpectedly experienced a significant decline. Now, this can only mean that the firm could also expect a decline in the recoverable amounts of the research and development project. Thus, it must do the impairment test to see if that is the case. For this case, the firm has recognized 2.4 million worth of impairment in the research and development cost as intangible asset. Third, the remaining balance of research and development costs must be amortized on a straight-line basis over the 6 years useful life. From this, we can assume that the impairment has been recognized quite early in the year. So from there, we now have an annual amortizations of 500,000, and at the end of the year 2022, the carrying amount of the research and development costs as intangible asset is at 2.5 million. So these are the three things that we have highlighted earlier. In the next coming year of 2023, there is an additional 2 million worth of development cost. So these will need to be added to the research and development cost. And in the same year, situation got better for the firm where it has secured a long-term sales contract. This means the firm need not to worry about the sales of its products anymore, and income is guaranteed. It also means that the situation where impairment is called for has no longer exist. Therefore, the firm could do a reversal of impairment. Our challenge now is to determine the carrying amount without impairment loss and the amount required to do the necessary reversal. So first, we need to determine the carrying amount and the accumulated amortization with the existence of impairment loss. We already know that the amortization for 2022 was 500,000. So for 2023, we have additional development costs of 2 million. So we add that to the 2.5 million carrying amount and divide that with 5 years of remaining useful life, and that gives us 900,000. So from there, we now have at the end of the year 2023 a carrying amount of 3.6 million and accumulated amortization amount of 1.4 million. These are the figures should we continue to recognize the impairment loss. Next, we need to determine the carrying amount and accumulated amortization should there be no impairment loss recognized. So in the year 2022, the amortization would be 900,000. Note that the research and development cost has not been deducted by the 2.4 million worth of impairment loss. And thus the carrying amount for the same year would be for 4.5 million. For the year 2023, we have additional development cost of 2 million, so we add that to the carrying amount and divide the sum with the 5 remaining years, and that gives us 1.3 million worth of amortization. Therefore, at the end of 2023, we will have a carrying amount of 5.2 million and accumulated amortizations of 2.2 million. So these two figures are the new figures that we want in our account. So now we need to compare the amounts to do the reversal. We have carrying amounts with impairment loss of 3.6 million and carrying amounts without impairment loss of 5.2 million. These give us a difference of 1.6 million. And then we have accumulated amortization with impairment loss of 1.4 million and accumulated amortization without impairment loss of 2.2 million. This gives us a difference of 0.8 million. So these two differences in total is equivalent to the amount of impairment loss that the firm has recognized. Having done the analysis, we can now do the journal entries. For the year 2023, we have additional development cost of 2 million, so we debit research and development cost account 2 million and credit bank or any other relevant accounts 2 million. To reverse back to carrying amount without impairment loss, we will first need to eliminate the impairment loss, so we debit accumulated impairment loss account 2.4 million. This will bring our research and development cost back to its original amount of 5.4 million, plus additional 2 million in 2023, we will have accumulated amount of 7.4 million. And then we need to reverse the impairment loss recognized in the income statement. Thus, we credit reversal of impairment loss account 1.6 million. That will later on be transferred to income statement as part of other income. And also we credit the accumulated amortization account by 0.8 million. This will increase the balance in the accumulated amortization account from 1.4 million to the intended 2.2 million. And finally from there, we can now check if we have the intended carrying amount. So here we have the total research and development cost of 7.4 million, and deduct from that the new amount of accumulated amortizations of 2.2 million. So we have the carrying amount of 5.2 million as intended. So there you have it. We are done with the exercises. If you have any questions regarding any part of the discussion, you may post a question in a forum that I will put up in Putra Blast, and you may also replay this video to see if you missed anything. For the next video, we will be discussing a new topic, which is biological assets. This will be under MFRS 141 Agriculture. So please have a read on this topic. You may refer to the standard in MASB website or articles by accounting firms like KPMG and PwC, and the PowerPoint presentation that I have shared with you in Putra Blast. Until then, thank you very much for tuning in, and I will see you again in the next one. Wassalamualaikum warahmatullahi wabarakatuh.